At any given moment, there are over 5,000 airplanes in the sky in just the United States, and internationally this number is more than twice that. Even with the global pandemic going on in 2020, international and domestic travel is not going anywhere. People will continue to fly, and that's why I'm so excited to share my investment in a company called AtYourGate. And in this video, I'm going to share with you a little bit about the company, the difference between investing in startups and in publicly traded companies, the investment terms, and I'll overview an analysis of this investment decision, overviewing the problem, solution, traction, finances, business model, the market opportunity, and at the end of the video, I'll be sharing what stood out and why I made this investment. If you guys are new to the channel, welcome. My name is Faris Sabati, and about 5 years ago, I started a company called MySwimPro, and today it is a global technology and media company with a distributed team that spans over 10 different time zones. The company's doing over 7 figures in revenue. The app was named by Apple as the best app of the year. We've raised just under $1 million in outside financing through venture, angel investing, and of course, equity crowdfunding. If you guys are interested in learning more about investing in startups and how to get started, make sure you check out a video I did on that topic specifically, how to invest in startups for beginners. Today, we're talking about the company AtYourGate. And to break it down very simply, it's a mobile application that allows you to order food while you're in the airport and have that food delivered to you. And this is food that's coming from within the airport itself. So any of the restaurants or cafes that you might see, rather than having to go and pick it up or wait in line, potentially miss your flight, you can actually order in a simple to use mobile application and you can have that food delivered to you. This is used by not only passengers in the airport itself, but also the people who are working at the airport, the employees, and we'll go into those specifics when we talk about the business model. The company AtYourGate was launched in 2018 to do deliveries, but in 2017 they won an RFP and they got started at the San Diego airport, and now in 2020 they're in 10 airports and have done over 100,000 deliveries. Now, one thing that makes this investment a lot different than any other airline related investment, whether you're talking about like a Delta or American Airlines, a publicly traded company, 3 big differences. When you're investing in a startup, you can't buy and sell your shares trying to make a quick profit. So if you've seen Delta stock fall significantly and you want to buy in and then maybe sell it when it grows up just a couple of weeks later, a couple of months later, you can't do that. When you're investing in a startup, you have a limited window of opportunity when you can make that investment, and you're riding it for the long haul. You're really going for a big opportunity, and you can't buy and sell shares as quickly like you can in a publicly traded company. There's also no government intervention, no government bailouts. As you saw with the global pandemic in the United States specifically, some of these airline companies and big companies in general were able to get significant government stimulus. If a startup is struggling, the company will fail ultimately unless they can secure that public or private financing. It's not the case in a startup where you can just go and have a government hand you $5 billion. So that's a second core difference. And then thirdly, it's really this go big or go home mentality for this type of a business and in this industry specifically. You know, unlike investing in a publicly traded company like a Delta Airlines, where maybe you'd like to see the stock go up, 5 to 10% per year over the next 5 to 10 years, pretty much this company is either going to go big or it's not really going to go anywhere. So that's really important to consider if you're thinking about investing in a startup versus investing in a publicly traded company. Now, the investment terms here, it was a $29.5 million pre-money valuation. So unlike Shark Tank, something you see where the entrepreneur is negotiating with the sharks, you got Mr. Wonderful trying to add royalties and trying to negotiate fancy terms. There's really none of that in this specific deal. So it was done on Wefunder. And if you guys are interested in learning about those platforms, remember I did that video on how to invest in startups for beginners. And also I did, if you're an entrepreneur and you're looking to raise capital online, and equity crowdfunding is something you'd like to learn more about, I raised over $500,000 for my company through 2 different rounds of equity crowdfunding on the platform called Wefunder. And I have a video specifically on that topic. So if you're interested in raising financing for your company rather than investing in a startup, make sure you check out that video linked in the description below. So on Wefunder, this company was raising with a price valuation. So again, not negotiating the terms here, no safe, no convertible note. And pre-money basically means at the end of the financing, let's say they raised $500,000, then it would be a $30 million valuation post-money, post the financing that came in. The price per share was $1.54, and they are most likely going to raise over $10 million in debt financing in the next 12 months. Really, this company will not survive unless they raise a lot more capital, and this is only part of the investment, raising $1 million to Regulation C. Now let's analyze the company itself. When we talk about an analysis of an investment decision, you really need to figure out, is this company solving a real problem? What is the problem? What is the solution? What is the business model behind that? And is this a big market opportunity? Do they have the traction to support solving this problem? And that really de-risks the investment. So when we look at this company, AtYourGate, the problem this company is solving is long lines if you're waiting for food at the restaurant, right? It's the favorites are maybe not at your terminal. Maybe you want to eat at a specific restaurant and it's all the way at the other side. It'll take you 15 to 20 minutes to walk to it, and it's just not reasonable, and you really end up, going on the flight hungry and you're not going to get what you want. And also just that rushing to the gate concept. It's not always convenient to go to your favorite restaurant, whether it's far away, you don't have time, you're rushing to the gate. And fundamentally, I believe this company is in the business of saving people time and convenience. Obviously, you're going to pay a premium to have it delivered to you, but there's a huge advantage of saving people time. And a lot of people who are traveling do happen to be in an economic environment. The fact that they can afford to fly and the fact that they can even consider this service means they're in a financial position to deploy capital to save them time and offer them more convenience. And really the solution is the ability to order anywhere at any time, have the food delivered, this white glove service, really convenient, and you don't have to fly hungry. As with COVID, and a lot of the different airlines have changed their policies, they're not serving food online on the board anymore. And really this actually helps the business model in allowing people to order and have it delivered before the flight, because people really need this. It allows pilots to stay on the airplane, and it makes it a lot better for the employees at the actual airline itself. Now the business model here is really interesting. So it's actually not anything new. There's a lot of food delivery apps out there already, but this is taking place inside of the terminal of the airport for sort of its own ecosystem. And if you fly a lot, you get familiar with the way airports are set up. There's a lot of commonalities. They all have a different spin on them, whether you're flying to London or you're in New York City or LA, any of these airports. They're fundamentally the same with a little bit of flair cosmetics, and maybe some things are different, but for the most part, they have the same ecosystem, and this business model really takes advantage of that. It's very simple. Basically, there's a $4.99 charge for the traveler on top of what they're ordering, and then for an employee at the airport, it's $2.99, so it's a little bit better, and these people will be transacting, if you're a traveler and you're frequent, maybe every time you go to the airport, you'll buy something. Could be once a month if you're a little bit more frequent. For the employees, it could be several times per month, because they're there all the time. There's also a revenue share with the restaurant. So, that revenue that is made from the order is being split between the restaurant as well as AtYourGate. Now, the traction so far is really interesting. We've got over 100,000 deliveries made so far. And then the most impressive to me as a technology founder, creator of an app, a 4.9 App Store rating is very impressive. And if you just read the reviews, people love this experience, they love the product, they love the way it works. Net Promoter Score of 75, which is basically the indication of how much people love your product. 75 is outstanding. As the company scales up, it'll be really impressive if they can maintain that or even improve upon it. 75, we're looking at top companies like Apple. People really evangelize it, they love the product, and they're repeat customers when you have that. They also have multi-year contracts with some of these airports, and that's huge because when it comes to competition and just having the logistics of actually being able to make this happen, that makes it a lot better. And obviously COVID has really accelerated this business model because it has become an essential service. Contactless delivery, social distancing, all of these come into play for this type of business model and this company specifically. Now, the market opportunity is massive. I mentioned the stats, thousands of airplanes are in the air right now at this very second, despite what's going on with COVID. And that number in the next, 10 or 20 years could even go up higher, from what the standard was pre-COVID. So obviously airlines are not going anywhere. Airplanes, traffic, and people going on flights is only going to increase in the long run. And by 2025, this business is projecting $200 million in revenue with a $60 million EBITDA. And that number is derived by 100 airports with 5% market penetration. There's a lot of airports out there right now. In 2010, they're only in 10 airports. So this type of business model really only works at scale. When we look at the finances, if you look at the income statement, it's not really something you would look at and then you invest in right away unless you understand the business model and what's going on and what the scale factors are. And so, the economics really don't work until you're at sufficient scale. So last year in 2019, there was a 3.8 million loss. If you're just looking at that and you're looking at investing in a publicly traded company and you don't really see the growth potential, then it's a bad investment. So in a startup, you're really investing in a lot of these other variables besides just the income statement. You look at the balance sheet, you want to make sure they have cash, their ability to raise more financing. That is one thing that is slightly concerning, just making sure they have the ability to bring in the capital that they need. That's really the biggest weakness of the business right now. I mean, $200K in revenue is not fluffing when you spend $4 million. So obviously at scale, those numbers will be a lot bigger, and I believe in that. But we just got to get there. And until 2022, 2023, when the airline industry is back kicking and everyone's very comfortable flying, that's going to be a weakness in being able to get through that, the next 12 to 18 months. The team is experienced entrepreneurs, specifically the CEO, PJ. I had the opportunity to actually meet him on a video call, and I really believe he knows what he's doing. He understands the unit economics of his business really, really well. I've actually talked with very few entrepreneurs who know their unit economics like the back of their hand. They're very confident, they understand the market, and that is really one of the fundamental reasons why I am investing in this company, because my belief in him as a CEO, the founder, and being able to bring this vision to life, because he's understanding of the cash burn that they have, the unit economics they need, and if he can convey that to the right group of investors, they'll be able to raise the right capital, and they'll be able to make things happen. So the why, number one, actually is traction. So I really think that they have good traction, specifically in their product. I love the product. It's very clean, very easy to use. You can go in, you can order pizza and have it delivered to you. It's amazing. 4.9 App Store rating, NPS of 75. That's super, super high. PJ, I mentioned, number two reason is, CEO, strong management team. At a startup, you're not investing based on the income statement. You're not investing based on the financials. You're investing on potential financials if everything goes right and everything works out, but you're really investing in the team at that level. And number three, I really believe this is an opportunity to disrupt travel. It's taking something that we know works. People love having their food delivered. From decades ago, people can call in, you can have your pizza delivered. And then we have food delivery apps, and now we're bringing that into the airline industry. So we're disrupting the airline industry and the way travel works, the way airports operate. And I believe in 2022 and beyond, more likely 23, 24, 25, in about 5 years, the airline industry is not going to look like it does right now. Who knows what's going to happen with the big airline companies, because this business really operates independent of those. Basically, as long as people will go to the airport and they want to fly somewhere, then not everyone's going to fly on a private jet. People are still going to use these commercial airliners, and they like to eat food. This business is going to be relevant. So as long as you believe in those two things, which I do, I really see a strong potential in this company. So I hope you guys enjoyed that breakdown of AtYourGate and why I invested in this company. If you enjoyed it, make sure you check out some of my other investment overview videos for startups. I've done everything from home rentals, cryptocurrency, education technology, professional sports team. All those videos are linked in the description below. If you're interested in investing startups or how you get into that, make sure you check out those videos I've also done. If you're interested in entrepreneurship, taking an idea and turning it into a business, make sure you subscribe. Feel free to follow me on social media. Hope you guys enjoyed this video. We'll see you later. Bye.